Are security tokens the next big thing? What's going on, everyone? My name is Fred with Robinland.io, and we're here to tokenize real-world assets and becoming the bridge between traditional finance and DeFi. If you want to find out more about what we do, be sure to visit our website at Robinland.io and follow us on our social media channels. We're also a growing community, so we would love it if you join our Discord. So the concept of security tokens really picked up steam in 2017 and 2018. And because they're gaining in popularity, we want to go over exactly what is security tokens, how are they regulated, and where can you get them. Security tokens are tokenized representations of an underlying security. So in this context, that security can be shares of a company, shares of a bond, or even shares of real estate. Now, security tokens were created to be a tradable financial asset, and they were designed to be an actual investment. So anyone that holds a security token, they are considered an investor. Since all security tokens are considered an investment, any company issuing these security tokens has a promise of profit. Now, these guaranteed profits can come from multiple ways. The issuing company can pay out their holders an interest rate, or they could provide dividends and profit sharing. So this is different than an ICO or initial coin offering because companies issuing out ICOs have the intent to raise capital to build out their business. And oftentimes these companies will categorize their tokens as utility tokens in attempts to bypass security laws. Now, this is a very gray area, and many of these companies are facing legal battles with the SEC for selling unregistered securities. And that's the benefit of security tokens because security tokens are 100% legal in the United States. So you might be asking, how are security tokens regulated? In order to stay compliant with security laws, companies issuing security tokens must follow very specific SEC exemptions. Under Regulation D, companies issuing security tokens can only sell to accredited investors. Now, these investors must meet a certain income requirement. They're required to have a net worth of at least $1 million or have an annual income of $200,000 for an individual or $300,000 combined with a spouse. Now, there are downsides to Regulation D. Only allowing accredited investors does limit your customer base, and everyone that's interested in your product may not be able to invest. Reg D also requires a 1-year lockup. That means anyone holding your tokens must hold them for at least 1 year, and that might not be possible for all investors. Regulation crowdfunding allows private companies to raise capital from the public. And similar to websites like Kickstarters that rewards investors with perks and products, Regulation CF allows investors to receive equity or other securities. Unlike Regulation D, where it limits to only accredited investors, Regulation CF allows all types of investors, but they do have their own downsides. Private companies are limited to only raising $1.07 million, and there's also a 1-year lockup period. Probably the end goal to all security tokens is Regulation A+, as there are several advantages. With Regulation A+, companies are able to raise up to $50 million in capital with no restrictions on investor types. Both accredited and non-accredited investors are able to participate. Another key advantage to Regulation A+ is the lockup period. There are none. This means that token investors can sell and trade their security tokens as they see fit. This is huge for investors looking for a quick flip or just need access to liquidity. But like everything, there are some disadvantages. With Regulation A+, you do need to seek approval from the SEC and qualify as a private company. This obviously will create more work for the company, but the advantages are pretty clear. So now you know what are security tokens, you know how they're regulated. The next question is, where do you get security tokens? So security tokens are often sold by private companies. And if this is something that you're looking to get into, I highly suggest that you check us out at Robinland.io, as we have several projects coming to market which will be made available to the public. Another great resource for security tokens is stomarket.com. You can think of this as a coin market cap for security tokens. You'll be able to see what tokens are available, their market cap, and their current price. So are security tokens the next big thing? Well, if you're an investor looking for something that has lower risk, is regulated, and provides guaranteed profits, security tokens might be your thing. But as always, please do your research and due diligence before investing. But that's all I have for you today. If you have any questions regarding security tokens or Robinland, please leave your comments down below and we'll get back to you on the next one.